Good morning, ladies and gentlemen, and welcome to the panel on sustainability or sustainable finance. We are very pleased to have a renowned panelist and panel on this subject matter. As a first go, I would like to take a few minutes of your time in order to introduce the topic. Again, looking at the overarching relevant factors and trends that we see, both from an industry perspective as well as from a regulatory perspective on that very hot topic. And then we'll deep dive with our panelists, which I present just after, in the respective areas. And I'll also be very keen to see the poll results that you've been able to participate on in that particular break that we just had before. Next slide, please. So when looking at sustainable finance and the way the EU has defined the action plan, in particular for financing sustainable growth, so the part of the sustainable finance and overarching sustainability agenda of the Union that concerns the financial services industry, we believe it's always important to understand their key objectives that are given here, and we'll be able to explore that both with a representative from the Commission as well as with the Parliament. Three key objectives that are important to just keep in mind. There's a clear-cut view that the Commission and the Union overall would like to reorient capital flows back from non-sustainable business activities into sustainable, or at least activities that do a transition into more sustainability. For that, we'll have the bulk of the new regulation, which sits around the taxonomy. Taxonomy being very important in order for us to understand in which target investments we are able to invest in line with sustainability standards. There are also a number of initiatives around labels, green bond standards. So a number of points that are complementary to this taxonomy view. And on top of that, we have the disclosure and sustainably financed disclosure regulation, which will be triggering a new way of classifying our products, classifying the way you as a financial intermediary or you as a financial market participants need to make disclosure on those matters to your investorships, and the way you would classify the products which are then eligible for being promoted as sustainable or ESG aligned. Now, this being said, is very much a sort of objective and impact for you as a financial market participant, as an asset manager, if we take now IFAMA as being the main audience here. Also, and that's where a very interesting dynamic is unleashed, is that the Union plan foresees that this is a matter that is also important for fiduciary and institutional type of investors in the Union. So pension funds, insurance companies, and wholesale distributors, i.e. MiFID firms, will be as well tasked to take sustainability into account, both in the way they invest as well as in the way they deal with their client, if we look at MiFID intermediaries. So your core institutional investorship, as well as your core distributors, the MiFID firms, will be looking into this sustainability from a different angle. And that's where also right now the market dynamics are very much already almost bypassing, so anticipating regulatory change. And this being said, is obviously something where your positioning in terms of sustainability will also very much depend on the expectations that your client base, that your partnerships, and that your institutional clients will look for. Next slide, please. So time-wise and timing-wise, very ambitious timeline, which has to do with the overarching objective of the Union to reach the Paris Agreement standards by 2030, and then go beyond those even on certain of the matters. Sustainable Finance Disclosure Regulation core date for the industry is in March next year. So that's where we'll have already a number of the requirements around disclosures, i.e. a first set of repositioning of our products. And then early 2022 will be the additional collateral changes in all of the already existing regulations that are relevant for us as an industry. So the MiFID II amendments, which are very much discussed about still on the nuances, the UCITS and AFMD amendments, so the product regulations that will be updated with sustainability and in particular sustainability risk assessment duties, and then IDD, i.e. the insurance intermediary directive, as well as the Solvency II. So the whole sort of insurance sector will move into a sustainability duty. So two core dates, which are not so far out anymore. We have a very short timeline on the March next year, and not given the consideration and the magnitude of change, even the early 2022 deadline is considered to be very ambitious for us as an industry to achieve. Next slide, please. Here, a quick recap on what it actually entails starting March next year. So we have three key classification sets that are to be looked at. The so-called Article 9, which is a fund, if we take this as an example, or a financial product, but a fund in particular, which promotes a sustainable investment objective, so which has as a core objective sustainability. These are very much funds that also look at the UN SDGs, so where we have a big impact proportion. Now, not all Article 9 funds need to be impact, but that is definitely something we see happening in the industry. What is important as well, that even those funds can still have non-sustainable investments, but there's a very much more scrutinized way in disclosing of how those non-sustainable investments do not harm. And you see there is an impact on the taxonomy. So these sustainable investments will have to be aligned with the taxonomy screening criteria, in particular when taxonomy starts to be applicable, i.e. early 2022 for climate and early 2023 for the remainder of the environmental objectives. Article 8 is, let's call it a mixed fund, so a fund that has promotion on E and S characteristics, so environmental and social characteristics, knowing that the sort of investment standards around good governance need to be complied with as well. And here we have a little bit more room as an industry to mix sustainable, ESG aligned, as well as non-sustainable investments, although there is very much this discussion coming on MiFID of whether all Article 8 funds can actually be fully set as sustainable. So we'll see how this evolves. Article 8 and Article 9 per se would be, from a disclosure regulation, the ones we would be looking at as being targeted as sustainable type of investment products. And then the remainder, let's call it this way, of the market would be non-sustainable in light of the disclosure regulation. This does not mean that they can't invest into sustainable assets. It is just not possible for them to actively promote, in particular, a performance linked to sustainability without complying to the disclosure standards. So there's a clear conviction of the union that this classification needs to underpin and obviously also work against the risk of greenwashing overall. Now, that is the regulatory view, very much technical, very much compliance driven. This, what we would qualify, is the entry ticket to the market. And you'll see just now why we believe this is completely changing the competitive environment and how the market is actually working. Next slide, please. So what we conducted in recent months is a survey with a significant audience of institutional investors. We had about 800 of them. We had about 200 of them, excuse me. We had about 300 asset managers, and we have some retail investors that we looked at. Now, the results we are getting from them is what I alluded to already in the beginning. So sorry for that. What eluded them was that we had a particular intention that the institutional investors would immediately, and that is within the next 24 months, switch very much so in a big majority term into non-ESG, or away from non-ESG products into ESG products. So this came not necessarily in structural terms as a surprise to us, but in particular in terms of the timing that is given there. So they anticipate, they actually even bypass some of what is given as a regulatory agenda in this particular matter. And you see also that the size of market we have here in this particular term is very much so, and that comes from a more conservative up to a more, let's say, optimistic assessment, that about 50 to 57% of the market would be classified as sustainable, at least following sustainability-driven type of investment strategies by 2025, which is a significant change in how the market would work compared to now. Now, drivers for that are obviously investor appetite. Drivers for that is the regulatory change, the societal changes that we live through. And that is important, this regulation has not only an impact in the way that you as a manufacturer, you as a product provider would go and need to change and disclose on sustainability, but the fact that the taxonomy actually takes a view on what is sustainable and not, and has a clear objective in regards to the plan of the Union to reorient capital, the sort of providers that are already looking into this more deeply, they are not necessarily looking for an outperformance on ESG assets when they switch their investment policies towards sustainability. They are very much so also looking at protecting against downside risk. And we believe that that is a change compared to the past. In the past, a non-sustainable investment was the baseline, and then there was an option for outperforming either generally the market or the more sustainable investments, which is not holding true anymore, by the way. Now, in the future, we believe that there is a stronger risk that non-sustainable assets will actually underperform the market. And that is definitely a change in the way you as an asset manager should be looking at this and trying to look at this also much more from a risk angle rather than just from a performance angle. Next slide, please. The actions we would identify, or we have identified in this particular report, and that is just for the sake of completeness of the introduction, is the first 1 and 2 is to be credible, to be positioning your organization in very much so of the discussions we have in the industry. There is this matter of credibility, this matter of, well, there's sustainability for the product level. What does it entail for the entities, for you as an asset manager? The actions 3 and 4 will be very much interesting now for us in the discussion, and I understand also for you as a poll result is, what does that mean for the products? So how do we position our products and how do we tackle the data challenge? Because investing into sustainability also requires qualifying data to understand whether you are meeting sustainability and ESG standards or not. And then the points 5 to 7 are much more looking at what you should be doing internally. So the ESG risk framework, which is not only relevant for ESG funds, which will be a sustainability risk consideration to be done by the industry overall. And then finally, education and reporting to your investors, core to this whole framework and core for you to meet in terms of standards in order to be able to work in this environment. So with this, I would suggest that we start and kick in to the panel. Thanks very much. Elise, you can switch to the other view, please. There we go. So now, before I introduce the panelists, I'd like to just give you a recap on the poll results that we conducted during the break, which was, what are the most important actions for you as investment manager to embrace the opportunities of this ESG shift? Highest conviction rate there was around getting the data challenge tackled. So yes, you obviously looking at it from a very operational matter to understand how I get the right level of data and the comfort around this data in order to be able to fulfill both investor expectations as well as regulatory compliance requirements. After that, it is about education of your staff. Very interesting and very important as we think as well. You saw that point also in the intro, understanding sustainability and educating around a common definition of what you would be looking at sustainability is a very critical matter. And ESG is a very generic and a very broad topic. So it needs to be broken down into its key components. And then after that, we have the strong ESG risk framework, as well as the sort of next product level, which is interesting, is that the products are the lowest probably challenge or action you embraced. However, let's be clear, it's the entry ticket. So without a proper positioned and proper disclosed product, you won't be able to actually do that. So all in all, we have plenty of sort of inputs that we receive both from you as an industry via the poll, as well as the sort of studies, the sort of conduct we have right now in the industry, and obviously the regulatory change. Without any undue sort of delay, I'd like to really welcome warmly my panelists. I'll start ladies first. So I have Beatrix Anton-Grönemeyer on the panel. She is Chief Sustainability Officer at Allianz Global Investors. I have Sirpa Pietikainen from the European Parliament. Very proud of myself that I have that one right. I have Ben Maxwell, which is the Head Sustainable and Impact Investing at M&G. And I have Alain, who is the Head of Unit DG FISMA European Commission, and obviously myself as the moderator, which I will be using and conducting through the panel. Very warm welcome to everybody. Thanks for joining EFAMA and myself on this panel. Now, looking at what we just had as a sort of first level sort of input, I'd like to start with a question to the two representatives of the asset managers on our panel, so Beatrix and Ben. And you know, when you will be, or when you are looking at this, how does this change in regulation? How does the sustainability do change your competitive environment and your positioning within this environment? And what are the driving forces for you considered to be unleashing and to be using this potential of change? And maybe Beatrix, you can start giving us a view from Allianz on that particular matter and how you tackle it.
Thank you very much, Olivier. Of course, and let me just highlight a little bit what we do here and where we are coming from, as this is maybe already a part of the answer. For us, Allianz Global Investor, as active asset manager, sustainability is an integral part of what we do and how we manage our assets. And by the way, it's our strong belief, it's here to stay, and it's one of the very relevant themes going forward. We are a pioneer in sustainability, launching our first SRI strategy in 1999, our first credit SRI as early as in 2006. They're among the first 3 asset managers launching a green bond strategy on the eve of the Paris Agreement, followed by first German blended finance vehicle to enable infrastructure in Africa, EMD investments on sustainability, and also, of course, and very important, products, even if this was not asked as a first necessity from the questions you had, towards SDGs, Sustainable Development Goals of the United Nations. We joined PRI, Principle for Responsible Investment, among the first 50 in 2007. And we are so proud to have an A+ score now for the 4th year in a row for our overarching approach to ESG strategy and governance. You ask impact to product strategies. Well, our existing sustainable strategies and funds mirror that we walk the talk. On the product side, as I just mentioned, we already have a sustainable footprint as a result of understanding the importance of ESG consideration on investment decision, especially on the risk side, and our clients' demand and business necessities. And as we still, unfortunately, not have an industry-wide standard on sustainable definitions, we work on it, but it's not here so far. A transparency for our clients is essential, and that's what we deliver. We classify our sustainable offering into 4 categories: integrated ESG strategies, sustainable strategies, SDG aligned, and impact. Why do we have SDGs aligned and impact in 2 categories? Well, you can't measure today already everything. You can intend to invest to SDGs, but maybe the measurements and the the real figures are difficult to show. So we don't want to do greenwashing. We want to really show what we are doing. And therefore, we have two categories here to give our client a clear understanding what to expect with us. Today, we manage roughly 150 billion. And by the end of next year, we hope we can tell at least to have increased that number by 45% or converting another 75 strategies to meet sustainability criteria. If you hear a little bit noise, unfortunately, my apartment is towards the street and they are cleaning it. So this is life. This is unfortunately the case. Our sustainability approach, coming back to this, includes, of course, which we find very important, a well-recognized fiduciary stewardship approach, proxy voting and engagement activities, and one of the NGOs, an important one, Chair Action, named us as one of the leaders on climate engagement. Well, but sustainability doesn't stop at investment. It's a part of our corporate strategy. And we implement KPIs across all functions, starting, of course, at the top. And we are going beyond this. Let me just mention our partnership with Sea Cleaners and our support to Enactus, which is a worldwide student platform developing towards sustainability. And now we are coming to driving forces. And I would like to mention four. Again, what I said, we are an active asset manager and we promise our client to maintain and enhance our client wealth. Well, I guess the environment has changed. If you only look to, as we all know, to financial figures to analyze a corporate and forget about the non-financial figures, may you don't get the right picture and may you take a risk in your portfolio, which you do not like to have. So that was, of course, the first thing we are looked to, but then at the same time, we had already clients asking us to bring their vision and their goals and also their ambitions into portfolios. So we understood this, and of course, that's why we also went into the SRI part, the sustainable part, which goes beyond risk very early. So, and then we have a fiduciary duty as industry, as you mentioned already, Alain. Olivier, sorry. We had a fiduciary duty. That means we have to channel money into the sustainable goals to maintain and have a future which is really livable. And that's why we also create solutions helping our clients not only to achieve financial results, but also responding to what they want more today, because they would like to do something good. And we are a facilitator, and we have to use this much more, as a lot of money is needed in order to go that way. And the last point I would like to make is, and I'm very proud here, we are a part of the Allianz Group. And Allianz Group leads the list of the Dow Jones Sustainability Index as the world's most sustainable insurer now for 2 consecutive years. And in 2018, Allianz was also co-inventor or founder of the Net Zero Asset Owner Alliance. And I guess with these 4 reasons, not to forget, of course, the 5th, which is important and kicking in now more and more and discussed today, we have to fulfill, of course, also regulatory requirements, sorry for this, which are coming, and we have seen this wonderful slide from Olivier at the beginning, what is expected and what is necessary going forward to play this game as successful as we have done it so far.
Thanks very much, Beatrix. That was very comprehensive, and I think it actually, states obviously a number of points that we heard more generally from institutional investors and industry representatives. So on the point of, you have both ESG, SRI, UN, SDG, and the even nuanced sort of distinction there. Interesting as well is the increase of assets that would be shifting towards sustainability that you mentioned, which is even higher. We actually optimistically said it's about 28% compound annual growth, and we do believe that that will be driven obviously in a heterogeneous manner in the industry. Some will shift much more, and others will be a little bit more reluctant and or bound to do less sustainable type of investment strategies. I hear from you that the regulatory change is noted, but will not considerably sort of change the way and the pace you do your change already, because you've been endorsing this trend very much so as an institution.
well, accelerate and complicate it sometimes, as people understand that there are some gray zones which we have to better understand in order to deliver on the requirements. But we have a full team working on that. That is, of course, for us key, because for us, sustainability is a must and not a nice to have. Yeah. It has to be in all what we are doing going forward.
Okay, very nice. Ben, maybe a view from another major asset manager, so M&G. And maybe you can perhaps give a little bit perspective on what Beatrix and, you know, in the intro we've been highlighting, alluding. You have a very much also SDG type of investment strategy that you promote as M&G. And I mean, you're the lucky pick on the panel. What about Brexit and the UK view on this one? So I think that would be at least interesting for us as an overarching audience to understand what is your view, given that you have obviously a home market, which is UK, probably with a hard exit end of this year.
Sure, thank you, Olivier. And it's very interesting to hear Beatrix's overview. There will be some similarities you will not be surprised to hear, but let me quickly explain sort of the M&G perspective, which is to some degree a bit of a UK perspective as well. I will happily pick up the poison chalice of making a brief comment on Brexit as well. But look, so M&G is a savings and investment business, which was created in 1931, and in fact we set up the first UK mutual fund, the first UK unit trust, to help, I would say, broaden the accessibility of investing to the general public in the UK. So I think right from the start of M&G's existence, we've had you know, transparency, communication, and broadening accessibility and engaging our clients as part of our mandate, part of our mission. And I think that focus on really having our clients at the center of our decisions and at the center of our thinking very much linked to sustainability, and one of the drivers behind our sustainability program, but also the importance of transparency and disclosures. So, you know, we embrace, I think, the shift towards and the regulatory and legislative shift across Europe and in the UK towards better disclosures. I'll just say a couple of words on M&G as well, in a bit more detail. So, we manage roughly 350 billion pounds, or a little bit more in euros across the UK. Across our assets under management, on behalf of a range of global clients, many of them in Europe. And we have sort of three aspects. We think one is as a business, as a corporation, as a company. M&G became an independent entity, having removed ourselves or spun out from our previous parent Prudential Insurance group in the UK a year or so ago. So we are now a sort of an independent corporate entity, and we see our responsibilities as an organization absolutely central to our mission. But we also, from the investment point of view, we're an investor, obviously, and we have two aspects in a way of our investment responsibilities. One is as an asset owner through our life fund and annuities book as an internal asset owner within M&G PLC, but of course we're also an asset manager, where we manage both that internal book of investments, but also client investments, as I said, across Europe, in the UK, but actually globally as well. And we really feel we have to embed sustainability across all those aspects. So maybe the first point to make is, of course, we embed and really integrate sustainability considerations, ESG, both thinking about the risks, but also the opportunities across all of our assets and investments across asset classes. That's clearly a work in progress. I wouldn't say we have the perfect answer now, but it's a crucial part of our responsibility now, not just for the sustainability or ESG team, but actually for all our fund managers and analysts. We think you only really properly embed and integrate ESG if you do it on the desk where the investments are made. So that's a crucial aspect. We also more broadly responding to client demand, but also recognizing, I think, the need to shift capital towards more directly sustainability oriented perspective. We have a range of sustainable funds, not dissimilar to the kind of format that Beatrix explained, but we have a range of sustainability funds across the organization, and that suite is growing. There's certainly ESG integrated across all our funds, we said, but there are sort of ESG plus funds where there's a clearer ESG mandate. We also have sustainability funds where there is again a clear focus on sustainable thematics or the most sustainable businesses, and then we do have an impact program which looks to invest in companies or assets where there is a measurable net positive impact on society. I think that's a really interesting direction of travel. And then maybe quickly going on to the sort of asset owner, asset manager perspective. You know, we think it is important to embed sustainability across both those aspects as well as a corporate. And I'll use one example to illustrate that. And I think the example is our approach to climate change. So we're a TCFD supporter. This year we will be delivering more detailed disclosures on our TCFD aligned reporting. I think that's a crucial aspect around the governance strategy, but also the stress testing and the scenario analysis and the risk assessment in our portfolios. But also on climate, we have recently set out a net zero ambition to bring our overall operational emissions to net zero by 2030, but also across all our assets under management to bring those down to net zero by 2050. Now, over time, we may increase the ambition of that 2050 goal, but we think it's a really important calling card or signpost for our organization in aligning our investments across all of our assets with a net zero alignment over time. And then sort of moving on to the final 2 points. One is that the kind of, you know, what are the driving forces behind this program? And we see 3 or 4. One is really the scale of the challenge, and I'll be brief on these ones. One is the scale of the challenge that global society and the environment faces, but also the challenge to the the economic and financial system. That is enormous. Regulation is the second point, because that is very much designed to address that challenge, and we support that wholeheartedly. Client expectations, the third point, really transformed, and you mentioned that 77% of investors or institutional investors who will stop purchasing non-ESG funds. Now that is as clear a message the fund management industry has as it needs to really highlight the client perspective, which has transformed, I think, in recent years. But then there's the investment opportunity, and this is the final piece of the jigsaw for us. I think it's become increasingly clear that avoiding or not taking an ESG approach into account is actually a major headwind to the long-term delivery of resilient and successful financial performance. But in fact, we think if you focus on sustainable thematics, sustainable businesses, that actually gives you an edge in your investment program. And then the final, the point on the UK, I think, and it's a quick comment here, that consistency is crucial, clarity is crucial. I don't think either of those principles are well served if we have significant discrepancies between, say, the EU and the UK. And so I've been working at M&G for nearly 20 years, but in ESG for 10 years. I think the trend towards the greater disclosure, greater focus on sustainability has just continued absolutely and accelerated recently. There's been no Brexit blip in terms of sustainability focus. And I think what we need to do is coalesce and move towards standards and consistency, partly because a lot of our clients and assets are managed for European clients, but partly because I just think in order to address the challenge, we have to take a consistent and a reasonably standardized approach.
Thanks very much, Ben, for the comprehensive view on both on ESG and your, very, I think, positive view on how to make things consistent. I think consistency will be a matter, and we'll come back a little bit later to the international sort of our overarching perspective it has. I think the discussions in the UK will or are not yet finished. I mean, there's still a lot of noise around this topic and how it should be embraced, but I can only concur that also our view, what we get as a feedback from the market is that, yeah, there should be a certain consistency in those standards. Otherwise, it is actually tackling or creating more problems than anything. Moving a little bit back from the industry into well, the authors and somewhat also the game changers in this perspective, which is both the Commission as well as the Parliament, for the EU being, you know, spearheading the change and endorsing those standards in a very, you know, much more advanced way compared to other regions of the world. And I welcome Alain and Sirpa as the representatives of both bodies who can testify a little bit now on what they would see. Now, starting with Alain, I mean, you're the executive body in this sort of environment. When looking at the texts, obviously we see a lot of statements around what are the sort of expected benefits for you as the Commission/the Union on that. You heard the statements of the industry, which is clearly endorsing the fact that we move into that direction. But maybe you can give us still a perspective, Alain, on your view on what are the sort of expected benefits, what is the outlook you have there? I mean, there's work on the Commission level into a refined sustainable finance plan. So maybe you can share some perspectives on that, on where the journey is going and what are the relevant points on your end. And I'll then kick in after you just with Sirpa to give perspective on the Parliament. But Alain, perhaps first on your end. And you're muted, Alain, just to be clear. Sorry.
Thank you very much. I hope you can hear and see me. As I've messaged you privately, Olivier, I've been cut off a few times. So if it happens again, I will try to reconnect as quickly as possible. Apologies, I don't know if the difficulties are on my side. So thank you very much also for your very good introductory presentation, as well as the two initial interventions from the industry representatives. Certainly the kind of trends that you've highlighted in your assessment, Olivier, if they were to be confirmed, would be very welcome. Although of course we would hopefully see even greater progress, but that analysis is very encouraging. Perhaps we should start by taking a step back and looking at the bigger picture about how do we achieve a transformation to a sort of a greener and sustainable and climate neutral economy. The EU is trying to mobilize funds, of course, through the budget. You are no doubt following the discussions about the multi-annual financial framework for 2021-2027 very closely. That in the Commission's proposal contained a very significant allocation of spending to natural resources and environment, and in particular funds dedicated to fighting climate change. But we have always said that public funds, in our view, are not going to be enough, and we need to mobilize the private sector and in particular capital markets, which of course is the whole premise behind our sustainable finance policy that we are working on in FISMA, but working together with many other Commission departments, because I want to emphasize that sustainable finance is now something that is very much on the radar screen of the Commission as a whole. I feel that very directly in the work that my team is doing, in particular on the review of the Non-Financial Reporting Directive. But I think that is also a good sign that the policies and that we are working on have a broader buy-in from the rest of the Commission. And hopefully this also promotes more integrated thinking within the Commission that perhaps sometimes has been the case in the past. So that's kind of the bigger picture. I'm sure that you've also all followed the consultation that we've carried out on the future sustainable finance strategy and the sort of 3 key objectives that we are pursuing in that context. The first one being strengthening the foundations of sustainable finance, then increasing opportunities for citizens, but also corporates and financial institutions to invest in or to enhance their sustainable performance, and then the third element, which is reducing risks and reducing and managing risks in related to climate and the environment. Now, my own team is involved in a number of those work streams, and I noted that in the poll, the data challenge has been identified as a top priority, and this is something that we are working on intensively at the moment in the context of the review of the Non-Financial Reporting Directive, because we do acknowledge that data availability from investees is really the foundation on which the rest of the policy or many other elements of the policy need to be built. And clearly, there we have some shortcomings, and we can, I'm sure, deal with those in a few minutes when we go into more details on that topic. We are well advanced in terms of our work on the sustainable finance strategy. I think it's due to be published in Q1 of next year. And that will then lay out the framework for the next few years. Perhaps a few points that I can highlight that I'm more directly involved with. There are, of course, many issues that we are looking at. But again, going back to this theme that data is data and analyses based on that on ESG data are really at the foundation of what we're doing. Some of the topics again that my team is working on. Clearly, the review of the Non-Financial Reporting Directive is a key element of that. We have also consulted in the consultation about perhaps the need for financial information to better take into account longer-term sustainability risks. So that's something that we're looking at. I think the point has already been made that in an environment in which ESG becomes mainstreamed, and I think that has to be the objective, is that ESG is no longer seen as an add-on or as a nice to have, but it has to be a mainstream of financial markets. Then in that context, we need to put financial and non-financial information almost on an equal footing. Clearly today, we are not there yet, and that is a key challenge for us. Other topics that we are working on in my team, for example, relate to the way in which ESG factors are taken into account in credit ratings, which is another important tool for financial markets, and is again linked to this data challenge also. And then also looking more broadly at issues surrounding sustainability ratings, which are distinct, and that is a point I always want to make about from credit ratings. But that are taking on an increasing role in financial markets and raise similar questions to those we have encountered in relation to credit ratings in the past, such as transparency of methodologies, etc. So those are some that I'm working on, that my team is working on more directly. But of course, there's a much broader discussion about, for example, how risks must be taken into account in the prudential framework for banks and insurance companies, and that is there is already some work that is ongoing on that. EBA, for example, is looking at some related issues. but that clearly is going to be another important element in the future. One of the big discussions at the moment, now that we have the taxonomy regulation, and I know that this is something that is very close to Sirpa's concerns also, is whether we can have how do we ensure more consistency between the requirements that we have in the private sector capital markets, and then maybe also the sort of a public finance and public funding. Not an easy topic, but one about which there is considerable discussion at the moment. I propose to stop there, and I suppose you want to move on to Sirpa, but if there are any further questions afterwards, very happy to take them.
Thanks very much, Alain, for the comprehensive view. I think what is important is that your conviction as being, ESG going to mainstream is clearly also what we see as indicators coming back from the market. So that might be reconforting then for the overall trend, at least for the union. And we believe that that will have an impact also globally on some of the other regions of the world. We'll get back to the data challenge, as you rightly said, a little bit later. And I think the interesting last statement you gave, with the public sector, private sector alignment is an interesting one. And we see that just now European Investment Bank has formally endorsed, its climate bank policy. So there's already one of the biggest lenders, structural lenders in the market that is actually going that way. Maybe Sirpa, you can give us your views from a parliament perspective, which don't necessarily always need to realign with the Commission, as we know, and also obviously the priorities you would see for any future legislative type of change in that particular space.
Yes, thank you. I'll do it very gladly. And there are 5 points, and I start what the Alain actually concluded. And the point is with harmonizing the reporting and measurement on private and public, because think what hell we would create if we would have a different kind of indicators, life cycle analysis, requirements and reporting in private sector on sustainability and environmental impact. And then a totally different set for recovery funds, for IEB, for European semester, for multi-annual financial framework and so on. Parliament actually didn't do as a good work as I would have wished to see it to do. And I know that there are some activities going on in Commission, but you too, if you can sort of advocate this issue to politicians and to the Commission, it would be, if you agree, it would be extremely valuable. And the point is that the taxonomy should be used as a base. Of course, it needs development when it is used in national budgets, on cohesion funds, on European Investment Bank, on ECB, on EU budget, and all over the public funding. But this needs to be the target. Align, like you do in accounting, the measurement and the indicators, both in public and private. You do not have different kind of a debt concept, either here or environmental debt. Second point is the availability of the data, and that actually has a multi-layer issue. One relates to the non-financial reporting, and I'll come back to that a bit later. But then there's this concerning the SMEs, concerning the companies and their possibilities to have the data. And I think that in the longer run, we would need to develop this kind of a European public data register. It might be linked to Eurostat, where you could find the information of basic environmental footprint, and then in the longer term, the social footprint. It's a bit like the food labeling, you can see the nutritional value in the packing. And so if you would like to count how many calories you have been eating or how much protein you would be getting, you just sort of add on what reads on the package, or you can go on the website and see how much protein there's in, or calcium there is in the broccoli. A bit the same kind of a system needs to be for this kind of a major ESG information, so that we can really get the whole societies and also SMEs to be reporting there. We are not yet there. It needs a lot of work. That is true, but it is doable, and this needs to be the target. Then the second part, and I'm still sticking on this data because it's so essential. If you measure wrongly, or if you have very sort of confusing data, all the efforts what you are doing are probably going to be misleading. What you need there is to harmonize the indicators and life cycle analysis, and the latter one is very important, because it's not only adequate that you look the environmental footprint by the doorstep of the factory to the doorstep of the factory, but it should be the first shovel on the mine up to the last breath of the material. So you need to take into account the both ends, the sourcing end, and then the life span of the product in different forms. And this needs to be developed, and this needs to be required on reporting, and this needs to be harmonized. And that, of course, would need to go both by private and public. Then about the reporting. NFRD, it's supposed to be, and that it shall be. But in the longer run, please do think very carefully. Do we do the best for reporting by having different reporting legislations? And that goes to due diligence and the responsibility requirements for the businesses and ESG requirements that are prepared, I know, in the Commission, and Parliament has stated out in its position. Probably it needs to be done in this way politically, but wouldn't it make much more sense to have directly in accounting directive the reporting standards, and then you would have the parallel for financial reporting and requirements, and company boards responsibility and due diligence and auditing requirements, and it should be in integrated reporting. And wouldn't it be better that you integrate the company responsibilities on shareholders' rights directive, for example? But either way you go, you need to set the requirements for companies to be responsible, to report in harmonized manner, and to present practice due diligence to reflect that on their company policies, to have transition plans to climate neutrality and other way to the sustainability. We are in the step of the major change, because this needs to happen if we want to survive in this planet. Then the third level would be the IFRS and international. And I have high expectations. It's good that the EU is leading, but we know that the financial markets and markets in general are global. So it's very good that we have the sustainable finance international platform. And what we would need to have is this kind of a voluntary actions and support to create this reporting and pushing forward this reporting standards and requirements for sustainability. And then in the longer run, we would need to fully integrate this thinking on IFRS and on the Basel, so that we do not have there very many different kind of reporting and thinking and requirement frameworks. I was very happy to hear Alain's comments about the Commission's plans, because what the Parliament has been demanding is that you would need to have fully fledged review of the financial regulation to reflect the sustainable finance principles. That means the credit rating agencies would need to rate both public and private, not only by financial, but also in sustainable matters. It would need to be integrated in the Basel framework and in respective ways that is needed in other sets of the financial regulation. So I hope that we can have fully fledged the plan about in certain stages when this is going to happen by the Commission. Well, there are a couple of other things I would like to raise, but I'll leave it up to the latter part of the discussion.
Thanks very much, Sirpa, for the comprehensive view again. We hear also, and that is in light of what we see also in the plan, that there's a number of building blocks that need to be moved and that are moved already. And there are certainly key building blocks that are just upcoming, non-financial disclosure regulation being one. Interesting what you mentioned also in terms of the public repository for some of the data. I think that is definitely also noise we hear from the industry saying, wouldn't it not make sense to have some data available as such? Now, starting from that and on some of the statements we heard, I mean, one of the key impacts it has for the asset management industry is obviously on the two core processes. And these were mentioned also partially by you and by Alain, which is the risk and sustainability risk measurement, as well as obviously the investment management, which is choosing the right investments and making sure that we have there the sort of limited issue on greenwashing as such. And again, having two representatives of the industry on the panel, I would like to give it, in a little bit of piecemeal to each of you. So this time I'll start with Ben. And maybe, Ben, you can tackle both, the core structural changes you see from a risk angle and sustainability risk angle. And maybe you can combine that with the data management issue, since most of that is linked to data and the way you handle the data. And then I'll let Beatrix take the investment process and likewise with the data angle on top of that. And please feel free, obviously, then to add as far as you feel necessary. Ben, floor is yours.
Okay, thank you, Olivier. Yeah, so the data question and the risk question, and then very much linking to the investment aspects of things are all super closely interrelated and interconnected. I think the phrase which often gets used, which is that you don't or you can't manage what you don't measure, I think is a good maxim for this broad area, and it maximum in lots of areas, but particularly when we're thinking about how to disclose, articulate, monitor and manage all these risks in our portfolios and disclose that to our customers. The data and measurement is crucial. So just focusing then on the risks aspects, and the risks are covered in a little bit in the other regulations other than the SFRD, but the way we see it is that there are a number of different risks. The first risk is that you don't really have the right information, and that's obviously one of the really design principles of the regulation in Europe, in the EU, and the addressing the information asymmetry. We can't make the right decisions unless I think we have the right data and the right understanding of that data. So addressing the information asymmetry is a crucial first step in addressing that fundamental risk about not having the right information that leads to our understanding. The second kind of key risk, I'd say, is that the sort of ESG issues affect our investments, the sustainability and financial as well as an ecological sense of our investments. And sustainability risks as defined in Article 2, I think, sort of talk about the risk that an ESG event could cause an actual or potential negative impact on the value of the investment. So that's core to our fiduciary responsibility. I think it's something that investors manage as part of their role, part of our job. But I think regulation that pushes that further is crucial. And I think in the context of climate, those risks are sort of, for example, around physical risk or transition risk. These are huge issues that are now being kind of incorporated into our investment thinking, not just in the energy sector, but right across sectors. How do we manage that risk better, and how do we monitor that? And the data, and improved data that disclosures come that come from improved disclosures really will be crucial there. I mean, and not just as a wish list, but as a fundamental requirement. And I think just if you think about those two aspects, and that's a sort of TCFD way of thinking about it, but actually increasingly, I think investors are looking the other way around. In other words, what is the risk that our investments are contributing significantly to social, environmental, negative outcomes? And I think that is the direction that our industry is heading in. And I think it is just as much our responsibility as our pure financial fiduciary responsibility. And I do think those two things are very clearly interlinked. So what is the risk that our investments damage the environment or damage social outcomes? And I think the sustainability, the sustainable financial disclosures regulation does address that in the concept of the do no harm elements. And I think that is an important consideration. Now, I don't think it's necessarily that easy. I think the question of how we companies disclose that information to us as investors in terms of non-financial reporting, but also how do we consider that sort of those concepts of do no harm. I think we've got a long way to go across the industry to address that effectively. But you know, in our impact funds, for example, we focus on the net impact. It's a crucial aspect of thinking about impact investing. It's not just about focusing on the positive contribution to a, let's say, primary SDG. It has to be about weighing up the positive impacts versus any potential negative impact. So I think if you have a sustainable or impact mindset that for specific impact funds, this is part of your thinking anyway. But I think bringing that into the mainstream dialogue and mainstream fund manager responsibilities, I think is challenging, but it's a positive step. And I think that links us to the final point, which is the one of greenwashing, which we've talked about. There's a big risk that funds miscommunicate their responsibilities and their role and their ESG credentials and the outcomes that come from the investments to our clients. So I think this regulation and the legislative momentum is clearly focused on that, and I think that's a crucial risk to manage. It's you know, it's talked about in general terms, but I think it's a real risk, and it's a real risk because we risk failing in the crucial aspect of trust between the fund manager, between the asset manager and our clients and society more broadly. But I also think the risk is almost a societally fundamental one, which is if we allow greenwashing to take place, then the real work that needs to be done by the financial system and by businesses and investors, the real work that needs to be done doesn't get done properly because we are putting a plaster over the issue rather than addressing it in an active sense. So Olivier, I'll stop there, but that's how we think about the kind of risk, range of risks and how they relate to data and regulation in this area.
Yeah, maybe a very short question, and just with the sort of ask for a very short answer then. I mean, US M&G, you know, what is your expectation in terms of how, you know, how do you get that data? Is it single source? Will it be also always be a multitude of sources? And what is the sort of crucial level of the role of M&G in managing that data? So is it, you know, ready to go? You take a plug and play type of view, or is that something you'll probably considerably will always be involved and making sure you have the right consistency, etc. of the data you need to handle?
Sure, sorry, and I'll be brief. It's multi-source. It has to be multi-source. I think the primary kind of source is getting the information from the companies, where we have this kind of challenge at the moment, or in the upcoming chronology of the regulation around the company disclosure requirements and then the investor disclosure requirements. That is a challenge, but it's one we have to manage and deal with. But company disclosure is the crucial point, and that doesn't just feed into us, it feeds into all the other sort of ESG third-party tools as well. But I think gone are the days where we can rely on one ESG service provider. We have to do the analysis ourselves. I think investors such as M&G, but Allianz and many others are developing our own internal assessment of the myriad sources of external data. And I think that's what we need to do. So source multiple sources from the companies, but other sources. I think NGOs an alternative ESG data sources are increasingly useful, whether it's geospatial mapping or whether it's sort of fintech information around climate risks or biodiversity issues, for example. But I think we have to take that into our own businesses, process it, and turn it into something that is useful for us as an investor.
Thanks very much, Ben. Beatrix, on your side, and again, considering the time, you only have a few minutes left, so please just feel free, obviously, to take anything you want in terms of investment management process, data. Again, maybe you can concur or sort of disagree with some of the views just stated, so to make it complementary to what we just heard before from the Commission as well as the Parliament and Ben.
Well, thank you very much. I guess if I listen carefully to Sirpa, I mean, agree on many points. And just coming to data, basically, of course, we have to do our own methodologies and so on. But what we need basically are consistent and defined data in open data sources. And then, of course, defined data. I guess that is really important. As we have a few minutes left, I mean, we are used to bring all the structural changes in. But if I think about a question which may come, how should rules and metrics for companies work together? NFRD, taxonomy, and SFDR requirements. Let me maybe make 3 points, which partly also were already in Sirpa mentioned, but also Alain. We for us as an asset manager, if we look to the timing of this and how it plays together, NFRDR, taxonomy, SFDR, I mean, the timing is a challenge. Because we as asset manager have to report on something where company just start reporting. So basically we have to report on something where the data come at the same time from the corporates as we have to report. So that's a little challenge. Then if you also look at, there is a regional challenge because so far the data requirements which we are having are only for EU corporates. We are a global investor, so how can we then really report if you think about on what we do on a global level? And then there's a third part, which is a little bit concerning for us as well, data, and that was Sirpa mentioning it, partly only are available for listed corporates with more than 500 employees. And, what about mid-small caps? What about the private side? So I guess that is really important to have more guidance looking forward, and without this technical guidance, we will really face confusion. Not only we, I think the industry will face confusion. And how can you then have a transparent reporting and convince your clients, because we need their money, we need more money, governments alone will not make it. How can we convince everyone to invest if the data is the database, and then of course the conclusions are not clear and the reporting suffers? So that is a little bit what I see here to highlight. And I just saw there was a question on the chat, if you allow me to answer. Sure. And it was about our 4 categories, and it was about also whether Article 9, what kind of products qualify for Article 9. I mean, there's the big discussion, what is 8, what is 9? It's still not clear. There are a lot of things to be learned and to be discussed. And for example, is 8 automatically the base for 9, or is 9 really the only sustainable investment going forward? So far, the green bond, of course, is an Article 9 product, which we have clear impact, 100% measurable. But we are also hopefully bringing a couple of our SDG funds to Article 9 once we have a little bit better understanding of what the real requirement is. And I guess that's it from my side.
Thanks very much for Beatrix for actually bringing up a few new additional points and being as short as possible. I understand and fully recognize that. Thanks very much. And maybe final statement to the public and regulatory view, Alain and Sirpa, maybe short statement if that is possible, And Sirpa, you already alluded to that, and maybe I give you a first go on that one. What does it take from an international perspective, because the union obviously has its agenda. It's very ambitious. I think I can see that from both how the market perceives it. Now, obviously, we are an international industry, and the data challenges in the union are a big one. The data challenge outside the union are even a bigger sort of matter of concern. So how do you see the union position and should probably drive also international alignment on that, and maybe with the kind ask to you to take it not, or to make it a little bit short if possible, and maybe Alain, you can then give perspective of the Commission on that one as well. Thanks very much, Sirpa.
Thank you very much. Firstly, it needs a lot of effort from private sector, and I know quite a number of global investors are doing in PRI and some other networks a good work on here, because without this push, the politics only can't do it. Secondly, what it needs is the EU to be active on this sustainable finance frame platform, to start official negotiations to create a global standard on this side. Then thirdly, what it needs, and this I would underline because of the importance of it, and that goes to what is in the taxonomy, the do no significant harm principle. We should not only concentrate ourselves to the green end and defining what is green and good, because the 30 trillion, as we know, is invested in sunk investments and hazardous investments. And so that needs a true effort to define what is significant harm, firstly, and secondly, this triple materiality in reporting. So the first is, of course, economic and technical materiality. Second is the direct impact of environmental hazards on your businesses. But the third is the existential. If the climate change is going to blow out in 10 or 20 years and the costs are 10 or 100-fold the corona costs, that is going to destroy all types of the businesses. So it is material, it's economic risk for companies too, and we would need to develop together that kind of a standards of reporting and analyzing internationally. Thank you, and I hope the EU is the one to push these open negotiations and to include not only science and actors, but the private sector, because I know that on the reporting agencies and on investor side, there's a lot of very highly intellectual work going on already. Thank you.
Thanks very much, Sirpa, for the ask.
And please do inform me about the results too, because we politicians need that feedback, how to evolve on thinking.
We'll try to do so. Thanks very much, Sirpa. Alain, maybe a final statement from the Commission on, what your views are in terms of international alignment and potential sort of ways to make that happen.
Thank you. Well, I will address that point, but I want to address two very practical and specific points that have been raised. One is on the question of timing. And in particular, the timing of the SFDR implementation and the NFRD review. And the second then is on the accessibility of information. There's been references to the sort of having a single platform to access information, to access ESG data. So on the timing, while we think there is certainly a need for greater convergence and consolidation at international level, because at the moment there's a real alphabet soup of standards, frameworks and initiatives, and new ones still appearing, such as the new initiative sponsored by the World Economic Forum and the big four auditing firms that was published in October. So there's clearly a need for greater convergence at international level, and as Vice President Dombrovskis made clear in the speeches he made earlier this year, we do recognize the need to build as much as possible on existing or future international standards to avoid fragmenting capital markets. But there is also a specific European need, both in terms of urgency and timing, but also because whatever standards we may come up with or impose in the future as part of the NFRD review, clearly will have to meet the needs of European law. And the SFDR is the obvious one. So we must ensure that companies deliver the information that's necessary to investors and asset managers or fund managers to comply with their own disclosure obligations. But there is also the impact of the taxonomy. And the technical screening criteria and the very important principles such as do no significant harm, I think will inevitably influence the type of information that has to be reported by investees. So there is no opposition between progress at international level and progress at European level. But I think we have to recognize that in Europe, there is considerable urgency and there are European specificities. And at the moment, there is simply nothing that we can use off the shelf that exists out there in the shape of international standards, and there is no prospect for such standards to appear in the near future. The IFRS Foundation is just now consulting on the principle of whether they should become involved in this, but the scope they've identified, which is climate, and in terms of materiality, very much a focus on financial materiality, is much narrower than the scope of the NFRD. So what I would hope is that developments in Europe and developments at international are mutually reinforcing, and that we in Europe, by pushing ahead, can perhaps act as a catalyst also to ensure greater convergence at international level. But as I say, there is no opposition between these things, but we in Europe do have a considerable degree of urgency, and that is why we have already asked EFRAG to start looking at various aspects related to the possibility of adopting future non-financial reporting standards in Europe. And I anticipate that, as was the case for the taxonomy regulation, where negotiations on the level 1 text proceeded in parallel with the work of the technical expert group, that if we want to ensure that standards and high quality information is available in Europe in a reasonably timely manner, that we will have to do the same thing with the NFRD review, that we will have to work in parallel on the negotiations of the level 1 text and on working on reporting standards that could then be adopted as level 2 measures, whether through delegated acts or anything else. Second point I quickly want to focus on is the accessibility. We are aware that there is a strong demand from the asset management industry and from investors for more integrated access to ESG information published by companies. And you will have noticed that as part of the Capital Markets Union Action Plan, Action 1 is about the creation of a European single access point. And in our current thinking, that European single access point would be comprehensive in terms of the scope of information it would cover, and it would also cover ESG or sustainability related information. So hopefully that will meet that need. We have committed to make a proposal by Q3 of next year. And then it will, of course, take a little bit of time to implement that single access point, but that is very much on our radar screen too. Thank you.
Thanks very much, Alain. Can only concur that also our conclusion in the report, based on the feedback we gotten, is that it is a challenge, but it also is a great opportunity for Europe as a region to lead the way and potentially also to create value, overarchingly speaking, on the way we do sustain our future. So many thanks to all of you. Many thanks to the panelists. I do apologize. I did a bad job as a moderator. We ran over for about 10 minutes on the initial agreed panel timing. I do apologize to all the audience for that. You only left with about 5 minutes of the regular coffee break time. It is my task to also highlight to you there will be a poll again in that particular coffee break in which you can answer. And then I wish you an enjoyable and nice sort of rest of the IFAMA event. And many thanks for hosting us. Many thanks to all the panelists. Thank you. Bye-bye.
Thank you.
Thank you.
Thank you.